Hi guys, glad to have you on board again. Today we're going to start that new week. First, I hope you had a great weekend, and we're going to do just as usual. That's the second time we do it here in YouTube. Thank you guys for the reviews you've been giving to me. Some are not really enjoying the fact that I'm no longer limited to 10 minutes. And as I am the talky kind of guy, of course I can have some extended videos, but no worries, most of you guys are just interested by the cryptocurrencies, and even if the video is lasting for, let's say, half an hour or even more than that, then generally the cryptocurrencies review just take 10 minutes at best. So don't be worried about that. Not necessarily going to have to watch out the entire video. And if you want to have a look at just one single asset, I remind you to have a look at there in here. This is where I've got my watch list, and you can see the blue area highlighting the one I currently am watching on the screen. So you can basically scroll into the YouTube's video ahead in time. As if you're searching for a particular asset, I'll try to anticipate what I'll be watching on during the video. And today we're going to, of course, cover up all the cryptocurrencies. We're going to talk about VIX. We're going to talk about bonds. We are going to talk about VXV on VIX, about the junk bonds, about the Euro dollar, GBP USD, Euro yen. We're going to talk about AUDNZD as well. I'm not going to cover up the equities, but we will talk as well about the indices in general, the global indices, Chinese, European, and UK and US. We're going to talk about the gold and the gas as well. So let's get it started. First of all, we do always the Bitcoin, so you guys can move away if you just want to have a look at the cryptocurrency market. So I've been sharing you a static graphic yesterday in TradingView, showing you that we decided to go toward the bearish decisional cluster. Remember, the previous analysis was that we were in the neutral area in here, in which it was totally unavailable to know if we were heading upward or downward. I basically decided to put a dumb trading area in here. So now that you know, when you're always speculating in the market, so I decided, not knowing where the market will go, to put the range strategy in place. But the market decided it otherwise, because there is one case in which, when you're wrong with your scenario, you'll see this. So this will be today's educational content regarding the dumb trading scenario. When you do dumb trading, okay, you generally have what we call the dumb zone, right in between 38.2 and 61.8% retracement. So remember, this is the area you don't want to trade into. If you do trade in there, you're taking a heavy amount of risk, as it's basically 50-50, and you have no chance to know which one is going to be the right side or the wrong side. So you rather like not to trade in there and wait for the price to reach out to the boundaries, either the upper boundaries in which you'll search for sales, or the lower boundaries in which you search for buy entries. And as you can see, the market tried to buy multiple times. Anytime it went to the blue area, so, sorry about that, I need to reverse the colors. Yep. So anytime we went to the blue area, I try to buy and push the price inside the dumb area. Anytime we've done that. But whenever you will do this, meaning you get from the blue area toward the dumb area, back to the blue area, not crossing, okay, if you are failing inside the dumb area, getting back to blue area once again, returning inside the dumb area, not making new high and exiting the dumb zone, getting to the blue area a third time, this is where you generally have the breakdowns or break up. Can happen in the opposite side, of course. So if we would have done that the opposite side, meaning reaching the red area, then dumb zone, not crossing the dumb zone, meaning that the price may not reach out to 61%, or at least if it gets there, may not be able to go below that. So it would have been, for example, on the opposite side, price would have been there, red area, then inside the dumb zone, but not crossing it entirely, back to red area, back once again inside. What the hell? Sorry, back back once again into the DOM zone, but making a higher low, and then whenever you get back to the red area, generally, you know, the market is not trendy, is not rangy. It's failing to cross the DOM area, which means that the bulls are in control, or in our case, the bears are in control. They broke it down, and in that case, the blue area or the red area become break up or break down areas. This is why I've been pulling that red arrow before it already happened. Okay, when we were just back then, I said we got two breakouts. If either we cross the entire DOM area, and in that case we're going to reach out to the red area and potentially the bearish cluster we identified earlier, or the market will choose to go to the bullish cluster, which we're currently trading right now, and the price in which will be 100%, or at least 90% probable to get to that bullish cluster will be if we get once again toward the blue area, which we exactly did. And when we got there, we managed to find the bear breakout. Really as simple as that. The support breakout in here was the trading signal you wanted to trade. So this is exactly right here that you could have taken a bearish entry. Anyway, that was just for the educational purpose in today. So whenever you forecast the price to be in range mode and you see that pattern triggering, not managing to cross the entire DOM area and failing 2 times, making lower lows, you know generally the third time is going to be a breakout one. And you know that you failed. The market wasn't neutral, the market was still bearish. So this is, remember what we've done on the previous week. There was 2 scenarios. There was this one. Sorry about that, but there was this one in which we would have made a 5th bearish impulse. And remember what I said, if we go to the downside, don't be aggressively bearish. That will be the most stupid choice you could make, because the market doesn't have that much room ahead to get into trendy market. So be aware that we could very well find a bottom in here, at least a temporary bottom, before, and we can go slightly lower, but I don't see the market falling apart right now. There is still chances for us to do that, and we're going to talk about that scenario slightly later. But to me right now, I slightly more favor this scenario and eventually this one. This one very less likely going to be the case, but we're not going to flush that scenario anyway. We're going to talk about this one and what could trigger that scenario. So now back to the technicals, okay? I said on the previous week that we will probably hold on to that trend line. This will probably going to be a support area as we broke it up. We installed multiple closes above it, so probably now this is a support area. Consider it as a dynamic support. It's not the price is going to buy right when we pull back on that trend line. Consider this as a safety breakout. We can go down, but at that point that trend line is going to break us and slow down the bearish momentum. Okay, and this is exactly what is happening right now. We're slowing down the bearish momentum. We also have another thing that is acting like a break. It's this. Remember, this is the mid part of the overall trend channel, the daily trend channel. And I said as long as we remain above that channel, above the 50% midline of that channel, we won't have the bearish crashing market that is going to flush all the supports. It may happen, but I don't think that the timing is obviously right now. I think we might need to breathe in before breathing out, which means we could go into rangy kind of price action, lateralizing the price, and eventually in the end, with all the breathing we could have made, have the nice breathe out, breaking down all the major supports one by one. So for now, I still forecast that as we might have found a wave 5, and what we're doing right now is kind of confirming this, because we made a bullish engulfing in here. Candle's not yet closed, but if it closes like that, I think we can flush out that scenario. At least as long as we will remain above that price. I mean, bullish guys can consider eventually making bullish entries with a stop loss, let's say at 6,500. Has to be a stop loss. It's very speculative, and the targets are not that far, meaning that you have to secure those trades upon the next resistances So it will be first taking profit, necessary taking profit at 7,200. But if you absolutely want to trade, in here is a bullish action price area. So fine for bullish entries. Of course, wait to have at least a 15-minute signal to trade. And for now, we don't have anything like that. So really is patience and respecting the strategy, of course. So right now we've got double support, that trend line and that mid channel, and I think that will hold the price and at least slow down the bearish momentum, pushes back to resistances. As you can see, we're in a bearish breakout, which means that generally we find a first bottom and then we push back to divergence, which means we could get there, finding some kind of subwave 4, meaning retracing a bit, pushing one more time to go slightly lower. Okay, so this is why I expect the price to do something like that. Retracing a bit, pushing toward divergence, reaching out to that price, which is 6,500, the one I think you can eventually buy, and this is probably there that you'll have the momentum confirmation in 15-minute time frame if you want to buy. So get there, buy, put a stop loss, not the big of a stop loss, very tiny leverage, of course, as this is content trendy. This is a retracement that we can expect in here, but I think we can expect some bullish potential during that week. Some bearish potential as well, because I think right in here the bears will probably take it over once again, and we'll see about that. So this is the bullish cluster. We're probably going to take bullish entries out of those and find more bulls than bears, more demand to buy the price or rebuy, meaning that probably in here lots of sellers will take their profits, which probably is going to push the price back to resistances. And this is why you should do the same. If you were a seller, this is, I think, the most rational choice to do right now to secure your gains, taking nice profits. Not entirely, keep some bearish leverage on, but I strongly suggest that you take at least partial profits in here. Or lower your stop losses or whatever. Sorry about that. Yeah, might be closing the window a better choice. Anyway, so expect some probable retracement in here, but it's still way too early to do that with low risk. So wait to have 15-minute signal, eventually take a buy entry and secure that trade upon the next resistances. Because there is still the risk for us to break down that bullish clusters, because if somehow we don't find enough bullish demand in that price area, then the price could literally fall apart. Because if we break that down, then there's no bullish support below those prices, which means really in here it will be a stop hunting and the price will literally be a falling knife. So if you eventually consider making a buy entry, he obviously needs to have a stop loss, because if things gets dirty, then for some reasons you might need a catalyst to do it, I think, but not necessarily. And if the price is going down, it's going to chase stop loss after stop loss, and you're really going to face a falling knife, and that's not something you want to be a buyer of. Okay, so if it goes down and if you bought, then you just give away your loss, and it's simple as that. That's why you need to take very low leverage if you consider making buy entries. Now about the bearish clusters we could find during that week. So bullish cluster in here, first bearish cluster in here with that trend line. Okay, the daily trend line from the latest to bottom that we clearly broke down is going to act as a resistance, just as this one is now acting as a support. This was a support trend line, now it is a resistance. So any pullback in that price area will be considered as potential bearish entry, interesting bearish entry. We can see that we have two technicals. First technical is in here. That's a technical resistance, as we managed to work out the price in here and then extracted it to the downside. So we might require some kind of pullback in here, in which sellers will probably be interested in the price. Second technical information comes out of the BTC1, which is the futures contract. Because once again, you need to be aware of that future contract. So be aware that the future contract opened right in here. So it's going to be first resistance, okay? But first and second important element is the fact that you have a bearish gap, okay? Means that the futures market has been gapping down. And that's not the best case scenario, okay? Means that it's either we fall apart, which is scenario number one, we find no bulls, and we break down to make new lows and potentially reaching out to the 6Ks and eventually lower, because if we go there with a falling knife, I don't see any reason to find support in here. Second option is the market is too aggressively bearish in here. We find bears exiting the market as a fifth bearish impulse. Basically 1, 2, 3, 4, 5 in here. The bears are taking major profits, which puts us back to resistances. And I think in that case, we can at least try to fill the gap, which means if you take that in a weekly perspective, okay, this is what it looks like. The market could very well at least need to fill the open gap, meaning reaching out to the previous week's low. Second option, we're reaching out to the previous week's close. So these are two heavy resistances in the weekly chart. Okay, so let me get back to the short time frame. Okay, so it really is lower boundary of the previous week and closing level of the previous week are two heavy resistances. So consider 7,400 approximately and $7,650 approximately as two heavy resistant area. The price could very well retrace up to. Okay, so consider this as a retracement only, but this is a technical price area. So you have this one and this one. This is price we could very well reach out to, and I think this is the zone in which we're probably going to find sellers during that week. So at least I think we're tracing in here. So if you want to sell, this is where you want to find your signals. So wait to have 2-hour signals or at least 15-minute time frame signals in there to consider making a new bearish entry. Stop loss has to be placed above that price once again, and all you'll be looking forward for is simply a bearish extension, so making slightly lower low, breaking the previous week's low, which is right here. You just want to get there, get below there for a short period of time, taking your gains and getting out. It really is that simple. Don't do more than that. Stick to very speculative leverage and don't be too aggressive. That's it for the Bitcoin. Same thing for Ethereum, IOTA, whatever. It's just that now the entire market is falling apart in terms of cryptocurrencies. As long as we're breaking down supports, just be patient, let the bearish momentum express itself. Of course, this is a buying area, so you can buy, but be aware that this is high risk, that you need to be fully adjusted to that risk, meaning low leverage, and really need to have quality signals to get in, which we don't so far. We don't have yet. So really, I think patience is the most rational option for the bulls right now. Wait for probably going to have one more bearish extension. So you can see bulls pushing slightly higher, bears triggering another bearish cycle to fill the breakout. It's going to break, bear, taking profit or exit, and in here you're ready to buy with low risk. This is what I would suggest you to do in order to reduce the risks. So that's it. Now we move on and we talk about the major. We're going to cover up the forex market first. So euro dollar, I think we're having that kind of structure in terms of price. ABC clearly visible in here. First impulse consolidation, second impulse. But I think the market is not yet ready to go to more downside. So I strongly expect us to get to a WXI structure in which we could probably going to find an X point in here below the B point. So at least we get there. And this is 61 to 76.4% retracement in that blue area. I think this is where we have high probability to find some bulls back in the game. I'm going to take that trade. So I'm going to use the usual visual thing. Okay, so in here, upon bullish signal only, I'm ready to take a bullish entry to trigger the I point. So I point will basically be 100 to 127% extension of wave A, of wave W, sorry. So you consider this as if we find a support in the X point, I'll probably forecast I point to go there. And this will be a fourth retracement point, which means we still have bearish potential afterwards. So I think in here a selling entry will be interesting as well. All right, that's it for the euro dollar. GBP just had a market catalyst. It's pushing us to the downside, and it's pretty much what I was expecting. So we'll have an I point as well in that structure. Clearly can see ABC correction in here, ABC as well. We could have one more ABC. So I think first bearish impulse is already cleared, or at least we're probably going to find the support near that price area. we're going to have a tiny retracement, one more bearish impulse, probably find an high point near that major support. Buying in here is going to be a very interesting buying opportunity. At least it will be to me. So in here, buying GBP USD seems like a good option to trigger a wave 2, which means that right here we'll be in wave 2, which means next wave is going to be the extended wave. As this is sub wave 2, but this is in here we're searching for major wave 2. We got 1, 2, 3, 4, 5 bullish impulse. Wave 4 inside wave 1 territory, which means we're in a leading diagonal, okay, which means that the wave that will follow will be the extended wave, probably high probability to see the extended wave being the next bullish impulse. So tiny retracement on wave 2, probably going to test that support, or eventually this one, but I still focus this one. We're gonna build this, so afterwards we're gonna make that trend channel. And obviously next wave is going to break up that trend channel and install some very nice resistance breakups. So I still focus us to break up that resistance, probably reaching out to at least that price, which is 1.37.5 or let's say 138. 50% retracement, 161% extension probably of the previous bullish impulse. So consider this as probably going to be our next price area cluster, in which I think we can take nice gains on the GBP USD. So I still focus on bullish potential, but for now the market catalysts have been to the upside. We have quite a lot of events regarding the GBP. We've got one today, not really great, not to say very, very bad. The market was expecting 0.3 and got negative 1.4%. So really is a missed shot in here, and that's what makes the price pulling back. But we have some other catalysts tomorrow as well, and also on Wednesday. Be aware that we're also going to have the ECB that is going to impact the GBP anyway. So as you can see, it's GDP all along the week. Big market catalyst. Monday, Tuesday, Wednesday, Friday, Thursday is going to be about the GBP and the Eurozone. So expect some major some major swings in the GBP thing, and we can have, of course, some noise because of the underlying catalyst, but at some point the market will decide a trend, and I think everything points us to the upside. Could very well be downside as well. In this case, will be extended wave 1, tiny wave 2, wave 3, 4, and then we're going to have one more wave 5 to go to the downside. But really is, to me, I think, a very less probable scenario. So I still trade to the upside, but with a stop loss if we ever get to broke down 1.32. If we got there, if we break that support, this is end of the game. I will exit, and of course I will buy with much more confidence if we were just doing a wave 5 to a wave 4 in here to wave 5. In that case, really I'm going to be aggressively more bullish afterwards, but for now I still think we already terminated that first bearish impulse. Euro yen, I've been taking short entry right in here once again, been shorting last week, been shorting again in here. I think we're sub wave 2, meaning wave 1, wave 2, we could have wave 3, 4, 5 to come. So this is a wave that is probably going to break down major supports. I think that's the time to jump in with the euro yen, so I just did. We've got bearish momentum. It's perfectly what I was expecting. Yet sine wave still bullish, but I hardly see us breaking up. I have clear invalidation in here. We are in an ending diagonal structure. I've been sharing that on TradingView yesterday. I guess it was yesterday. So we are in expanding ending diagonal structure. Wave 4 is entering into wave 1 territory. Wave 3 is longer than wave 1. Everything is respected about the structure. Generally, the wave 4 is found near the origin to wave 2 trend line. So this is the price area in which we can we're probably going to find the resistance. We found it the previous week. We're just pulled backing in here, and I think we're making the have a lot of sellers, and we should have the price breakouts happening right after in that wave 3. So expect the price to go down in 2 waves. So ABC structure is expected, just like we done back then. First bearish impulse, lateralizing, second bearish impulse, so you can expect something like that. The wave 5 cannot reach out to the trend line in here, which means we should terminate wave 5 not far from the trend line, but not touching the trend line either, okay? So consider this as probably the wave 5 is going to terminate right here, not finding the trend line, but making ABC structure, reaching out to 127 to 161% of wave 3. So that gives us that technical area. I would exit in here as a bear, take my profits in here, but remember ending diagonal, meaning that we're terminating a structure. So the context we have in here is that we're probably going to terminate an ABC structure, terminating a range structure, and ending diagonals suggest that we will terminate and reverse in here, which means I will be bullish reversing the euro yen after we reach out to that price area. So 119.35, 36, I'll be taking bullish entries, of course with bullish signals, but I will be ready to reverse my scenario. So it's selling right now for a nice bearish impulse, but buying afterwards to consider having a bullish reversal to come later on. That's it for the forex part. No, sorry, we've got AUDNZD to talk about as well. So for now, we're still confirming that to be potentially retracing to the B point in here, and probably going to terminate the ABC structure afterwards. So it's eventually, I'm not selling AUDNZD, just to set things straight, but I think in here is more likely going to find sales in that market. What I have interest on is if we don't find sellers. Remember, you can trade by opposition. It means that we're supposed to find sellers in here. If we don't, it means that there's no sellers. If there's no sellers, and as I am a buyer, I will buy. It's simple as that. If sellers are showing weaknesses, then I'll take advantage of those. Which means if we get to the resistance somehow, alright, so as a bullish guy, if the bears don't show up in here, if we manage to get back to the previous resistance, which is for now, from what I can see, remember things, this is really important. The technical framework you're using, I'm using Elliott wave forecast. But if somehow I'm wrong, once again, be aware that being wrong is not a problem. It's okay. I know that we're in an extended bullish wave, which means any resistance breakout, I will take a bullish entry in there. So if somehow no bears or not enough bears to all the resistances, if we break them up, I'll put money in. I'll put leverage. I'll put some more buy entries in here. I'll be ready to do it. It's just that it's either we make a double bottom structure and the bulls are really in control, and I'll pay the break up and validation of that double bottom. Otherwise, I simply forecast the bears to take control over it. Consider this as a trend line. Anytime we're going to pull back that trend line, I think bears will be in control, taking a B point, extending to there. This is really interesting buy price. I will obviously buy there on that. Consider this as a trend channel. So whenever we get to that trend channel, any bullish entry in here will be a signal to trade to make, pure and simple. So this is where I'm ready to take bullish entries upon signals, speculative entries. I'm not taking the bearish trade in here, but I'm ready to take a bullish stop entry if we manage to break up that resistance and activate a double bottom structure. That will give us a target straight up there, which means that if we make double bottom validated, then it pushes us right to the next resistance, which is a target, expected target that we should get out to. So that's one way or another. It's either we make full load of bull entries, of bull guys, and we're going to probably break up that resistance, or we take the double bottom structure to reach out there, but I'll take another layer of profits in that case scenario. So I will pretty much favor this one to get more bulls in the next run, but if the market decides to go there anyway, I'll take I'll take gains in that price area, no questions asked. Anyway, moving on, gold has been exiting its channel but not necessarily managing to find bullish entries. So the question is whether this is a wave 1, this is a wave 2, we should have wave 3. But I'm not putting leverage unless we manage to break that up. So unless we until we don't manage to get up to that resistance to break it up, which means I'm putting as well in here a long stop bullish entry. So we are probably going to do that. It's better. Okay, so consider it that way. If we get back to the resistance once again, I'm ready to take long stop bullish entry. That means we'll be in wave 1, 2, 3 kind of scenario and probably going to break up resistance in here, and the resistance clearly is there. So we're going to break up that price if the bulls are in control. Option number 2, this is obviously not a wave 1. We're going to reintegrate the trend channel and fuck up all the bulls, meaning chasing all the stop losses, mine included. But this is how it goes. Okay. For now, I think being patient is the only option. The VIX has been manipulated, which means the gold is still under pressure. The equities are pressuring to the upside. They're trying to get as high as possible, but anytime that market is going to fuck up, I mean, everyone is going to reverse. It's still the same ongoing scenario. I'm still bearish on the SPX, bearish on the EUROSTOXX, bearish on the FTSE, bearish on GPN, bearish on ENG. I'm shorting all those shits, but the matter is just I'm speculating. Okay, I know I cannot manage timing. I know that some heavy amount of money is manipulating that market throughout the VIX. They are selling you tranquility, and this is a big problem right now. But so far, it's working well. So as long as it is, you cannot go against those manipulations. It really is waiting for them to reach out the no return point, and whenever it will be no longer cost effective to sell volatility, they'll have to buy themselves out of that market, meaning we could have heavy buyers plus those who've been manipulating that will need to get out. And this is the double Kiskel effect that will push us VIX to very high pricing, very brutally, and that could cause a sharp breakdown on the equities. This is the scenario I'm trading. Once again, it's a scenario. Don't know if the market is going to pick that scenario or not, but if it does, I'm going to take way more gains than the loss I could make. I have signals to suggest that I can trade that scenario, so I've been trading it. It's pure and simple, simply that. I don't really care what the market will choose. It's just that I'm respecting the strategy in here. I do trade eyes closed. If I'm wrong, I take a loss. It's simple as that. But I stick to speculative leverage, either on the gold, on the SPX, or whatever. I need to find the gold breaking up. I need to see the SPX breaking down to get into leverage positions. For now, all I have is clues that the market is probably doing it. But so far, I have no confirmations. No leverage until you get confirmation. That's how speculators must see the market. If you're trading what you like to see with leverage, you're going to get into heavy troubles. That's nothing compared to what I do. Okay, I try to give you that sense of risk management. When you speculate, you cannot put leverage until you get confirmations you've been truly speculating. You've been right into your speculation scenario. Anyway, about the VIX. Third time manipulation went down. I thought this was where we'll do it. I kind of fell in here because the bears didn't solve the volatility back then. They sold it right here. You can see same manipulation at play once again. Low volatility, price going down, no reason. Now once again we triggered the bullish reversal. We got out as we broke up early last week. So we exited the pattern. It's just like we were right now. It's like right now we are there. So as you can see, volatility is going to pick up. But back then that was the first manipulation. We got another one back then, and the third one in a row. I think this one's the last one. We reached out to the expected target area in VIX. I've been reinforcing this. I told you last week I'm heavy bullish on VIX right now, which means I'm leveraged in here, and I expect the price to go fucking up all the sellers in volatility. So it's just a matter of time. I think right now we're going to have bullish price movement in the VIX. Not necessarily going to be today or tomorrow, but all I know is that we'll have bullish extraction to forecast in the next following days. I don't see the VIX ever going to retrace there again, neither breaking it down. I think it's end of the game. Those who've been selling volatility might know that right now is too risky. We've got bullish momentum. We'll have bullish prices as well. I think now anytime the equities return back to support is going to be breakdown on equities, which means VIX is going to break up. and probably gold as well. So we'll see if that week is going to be triggering things. As we've saw on the economic calendar, we've got quite some things to trade during that week. We got Trump Kim Jong-un meeting on Tuesday to start pretty much interesting things. We've got IPC, so we've got inflation on Tuesday as well, so big day on Tuesday, and we follow up with a very huge day on Friday with FOMC, and probably market expecting the interest rates to raise to 2%, which is a very big level, so consider it as a switch. Well, the market is switching on to 2% interest rate on Fed, and that's a big deal. But of course, we're going to have a look at the dot plot and the projection. That's what the market would like to see. So Wednesday going to be a big day, and Thursday is going to push on further with the ECB doing the exact same thing. They're going to roll over the QE, and the market is going to have a look at what about the words used by Mario Draghi to kind of trying to find out how brutal could be the interest rates raising plan for the ECB. Is it going to come sooner or later? This is what the market will try to figure out. And of course, we got another set of sales details on Thursday as well for the dollar for the U.S. economy. So really is a major week ahead. We're obviously going to have a swing. And from what I can see, and this is this week's, I think, big scenario I'll be trading, U.S. equities have just terminated a wave count. Clearly have wave 1 in here, wave 3, wave 4 pullback. We're building wave 5. Okay, so it means that we're terminating an oscillation that started early June, or I'd say late May. So we're already in an upward move, and as you can see, wave 1, 2, 3, 4, 5. I mean, we're currently probably terminating the up move that started back into early early April. So it's been 2.5 months that we're into that. What is nothing like a bullish market, because that could be an ending diagonal, so that will be the end of a structure, and if we do have that, that means nasty fucking things are ahead, and once again, all I see is bullish, whatever. Anyway, I'll have a look. It's just Wall Street's bullish, Wall Street's going to the market top, Nasdaq is making historical highs, so obviously Dow Jones and SPX will do in the next following month. Everything is going pretty well. Now what the hell, VIX is in heavy danger, gold is pretty cheap, we've got heavy catalyst down the road, and we already have bearish momentum, which means momentum's already bearish. So right here, we could very well find a resistance, fail to break up, and if we do that, I'm sorry to tell you that, but the market is going to be brutally reversing, and if this isn't the right structure, if we made an ending diagonal, this will be first manipulation on the VIX, second manipulation, third and final manipulation, not managing to break that resistance, failing after 3 manipulation, the market will collapse right after right. If we go there once again, I think this is where we'll have nasty bearish breakout, VIX heading toward 30 values. I really see that scenario highly probable. So I think it's just a matter of time. If that scenario has to trigger, I think that week is the perfect timing to trigger it. Okay, so we'll see how it goes. Of course, if everything is good during that week and we've got only good news, then I think the bulls will have the strength they need to break up that resistance, chase my stop loss, and invalidate my scenario. Because once again, I don't know what the truth, what the final movement is going to be. All I can do is forecasting, trying to trade with interesting risk-reward ratio and nice risk management. And if the market decides to go on the opposite side, then I'll have to trigger a stop loss and fail that scenario and congratulate the bulls and just move on to the next scenario. All right? That will be, if that's the scenario, if bulls are in control, then you know what I'll be doing. I'll be buying bonds, selling bonds and buying yields. Because if the market is going crazy high on the equities, I think that we'll have bullish bonds, and the bonds will probably go to 3.5 or 3.6 or even 3.7. percent on yields, which means this is the market I'll be trading. If I'm stopped out on the equities, I think the bonds will surge, and I'll have to take those. And this is the only market I'll trade. I'll no longer touch the equities, but I'll go into trading the bond market. It's a high liquid market, not possible to manipulate this. So you can manipulate the equity prices as long as you want. I don't give a shit. I won't buy any equity until a couple years. Or at least if we drop down 10 to 12%, 10 to 15%, then I'm ready to take buy entries on the equities eventually. But if we keep on going up, then there's nothing to buy anymore. It's just buy yields and wait for the entire thing to collapse. Anyway, that's it about the junk bonds. So as you can see, junk bonds have retraced back to resistances. We are perfectly at the short entry price. For those who would like to sell the junk bonds, consider this as a trend channel. We could probably fail in here, so meaning junk bonds being sold. This is what I expected the market to do. Finding that resistance, filling the gap, so we still have some tiny upside potential just to fill the gap. But I think that gap is a bearish entry, and afterwards we're going to probably reintegrate that trend channel, break it to the downside. And of course, if junk bonds are sold, equities will be as well. That's a certainty. We've got the VXV to VIX ratio as well, suggesting we're going to have volatility back in the game really soon. Consider this, okay. This is about to come. To set things straight, this is what we have, okay. So we've been building an upward retracement, finding that resistance. If in here, I think high probability to see VXV to VIX ratio. For those who don't know what this is, VXV is the 3 months expiration volatility, as VIX is a 1 month approximately expiration. So what we're doing in here is comparing risk sensibility toward 3 months to a month. Which means that whenever VXV to VIX is going to the upside, it means that we find out to be more tranquility in the 3 months expiration than the 1 month. Okay, and generally we find a tipping point in which volatility is reversing, and mean we've sensed more risk to come sooner than later. Okay, when we go up on VXV to VIX, means that okay, it's not right now that we're going to have volatility, so step back and relax. And whenever we go to the downside, it means okay, oh shit, we're going to have troubles coming really soon, and I think this is what we're about to see. Other asset classes we need to talk about, well, really not necessarily, but the Euro stock is going to play out just as the SPX will, just same thing for the FTSE, GPN. I think all the equities are relating to what the SPX will do. If it's falling apart, then all the equities will do as well. So it really is today's scenario, finding out what the big swing move is going to be. Either it is fucking up all the bears once and for all, and we're probably going to install a bubble right after that, or we will find sellers, fail to break resistance on the equities, and then we'll have a falling apart market, probably going to drop 10 to 15%. So the expected scenario is just that I will have failed the timing by shorting too early previously, but I'll still be in the right choice. The market will eventually pick. Now, the guys, to terminate, we are back again to the resistances. We've been holding the mid part of that trend channel once again. So I still forecast that market to break up and reach out to that resistance. So the above $3 to come, I think, in the gas. So it's being patient. That market is going up and down until we get probably a 10%, 5% day that is going to come out of nowhere. It's basically waiting to find a market catalyst to go up there, but I think the market doesn't want to go down. As you can see, we've got that pretty nasty upper shadow candle, and the market did fail to confirm it. We broke it down, but we went closing back into the body of that candle, which means no bears. Otherwise, in here, we would have made a pretty nasty bearish candle. So that's not the case. So I think we don't have bears in that market, and at some point we're going to break up those resistances. Just the market is sliding upward, and at some point we're going to have to break up. It's just being patient right now. That is the only option. So to sum up informations about what I expect to come during the next week is probably going to have a upward movement on the gas, on the gold as well. So I see commodities and precious metals to the upside, as well as VIX. Probably junk bonds going to be sold by a risk sensitivity to that market. So risk probably is going to get back in the game with that Kim Jong-un Donald Trump summit and all the major catalysts we have down the road. I expect a very interesting week as well for the GBP USD, so have a look at this one during that week. Probably being patient to find a bottom, but I think that bottom is something you'd like to buy. So I remain bullish on GBP USD, but I wait because I think the catalyst can give me a much better price in the next following days. But be aware that the last catalyst is on Wednesday, I think, for the GBP. We still have one as well on Thursday. So I think Wednesday is the day you want to pick your entries. We've got the inflation in here, so probably this is where we're going to bottom up in GBP. So I think waiting for Thursday, for Wednesday, waiting for that catalyst to pick up the market into the bull side is probably going to be my choice. So I'm going to put an alert on that IPC core. And same thing for the retail sales on Thursdays. That will be major catalysts. So ECB as well is going to be a big one. All right, and got interest rates. Fed interest rates, going to put alerts on those. So really is the big day that we might expect. So be aware that we'll have pretty interesting week ahead. And if we had somehow to take a stand and reverse ongoing trends, probably is going to be happening during that week. Goodbye, guys. Oh, sorry, I forgot to take the questions you might have. So I'm going to switch back there. All right, so let's take previous week's video in here and going to the video itself. Hello guys, glad to have you on board again today. Thank you for the nice reviews you've been giving on yesterday's first. So keep posting on YouTube, better than TradingView. Thank you. I strongly think I keep it that way. Thank you guys for your reviews. I really enjoy that. I'm pretty happy actually that we've made more than 1,000 views as this is the first videos we're making. So I see that you guys have been following through out of TradingView to follow me in here. So thank you guys for being there. Actually, I just saw that I was crossing the 10K as well. So thank you guys for the confidence you put in my analysis in here. Oh, and shit, we also made #1. So yeah, pretty great. I'm just discovering this right now. So really, thank you guys. One more buzzy thing down the road with this thing. So actually, that's good. So thank you once again for the confidence you put in there. I'm pretty happy because you might all be aware of the fact that it all started when I put it at 2014 crash comparison. It's when things went crazy, when you guys jumped all in. I crazy skyrocketed with the followers and things like that. And then obviously things slowed down a few weeks later on. And I was kind of forecasting for people to flush out. I mean, to be... it's just people getting in because of that buzzy thing, and then I expected people to get out after this, but you didn't actually. You stayed in there, coming back each and every day, coming back for more. So really, once again, I want to thank you guys for this. It's not just for pure commercial bullshit or things like that. I really thank you guys for that, because it means the content is quality. If you're coming back every day to get some more, it means that you're learning things, and this is the only reason I'm doing this. Okay, I'm not selling you shit. I'm not trying to sell you my indicators there at all. I'm just trying to get you guys getting better at trading, thinking the way a trader does. I mean, getting out of gambling and just rationalizing things, being aware that you don't control anything. It's chaos theory out there, so you're never going to control anything. This is why you need to understand risk management, all right? not playing God anytime soon. All I do is taking risk, because this is how you get money. But if you take too much risk, you're gonna lose money. So it's really trying to find out that sweet spot in which you're taking risks to get returns in the end. But to get reward in return, sorry, because there's no reward if you're not taking risks. But the more risk you take, at some point you get into the red area in which you're going to take the loss instead of the gain. And you really want to find that sweet spot. And it's not something you're going to figure out in a couple of weeks. You're not going to turn into a trader tomorrow. It's not going to happen. You're going to have to practice for weeks. Got to learn things, make mistakes, learn from those mistakes, grow up as a trader. And eventually, in the end, you'll get into that sweet spot I'm actually talking about. Anyway, keep on going to the next comments. Thank you. Really hope that you will have timelines. Yes, I should consider doing it, but just be aware, actually, you need to know how long, how much time this is taking me to do those things, because be aware that I'm doing this both in French and in English each and every day, meaning that the reviews are taking between half an hour to an hour for the longest ones, and obviously on Mondays, this one is going to take an hour. So consider the fact that it's taking me 2 hours at least a day to record the videos. Then I'll have at least 3 hours to 4 hours answering all the questions you're asking me via emails, right in here, in TradingView, in Discord. So consider that the minimum timing I have to spend for the educational content in which I have absolutely no reward out of. I'm not making any money. I'm not taking a cent out of doing this. Meaning I'm spending 5 hours a day uncompressible, meaning that's the least I can spend in a day-to-day basis to get you guys free educational content. So be aware that I'd like to do it, but unless I find out to find a secretary or some kind of things like that, I don't have the time to do this. All right, so I will really appreciate if someone is ready to do it for me, because you can basically timestamp things as well. So if someone has wants to spare 10 to 15 minutes a day to do it on the videos, I'm pretty happy if you guys are doing it. Okay, if someone is stepping up to do this and timestamp the videos to help others, then good for us. Okay, I consider things to be consider us being a community. Okay, that's why I try to develop right in Discord. We're a community of traders helping each other getting better. So if you think that you can spare 10 to 15 minutes timestamping the videos to help others, then good for you. It's by helping others that we're all going to get better. Okay. I know that could be some motivation, stupid selling thing, but that's actually true. That's why we've built Discord. That's this thing. The more you communicate with other persons trying to learn like you do, the better the entire community is growing, the faster it's growing. Okay, so that's where that's how I get to the conclusion that the more you help others, the better you help yourself, actually, to get better, growing confidence out of what you've learned by transmitting to someone else who is not yet having it. So it really is about that. When you learn something out of what I've been sharing with you guys, and you see someone who hasn't yet figured it out, then just teach him, teach that person what you've learned, and that's how it goes. You just transmit the knowledge, and you will have gained a precious element, which is confidence. Okay, when you feel confident enough to teach someone else, it generally means that you're really getting better at what you're doing, and that means you got confidence, and that's a necessary thing to get into trading. Now, moving on, sorry. So thank you for the nice comments. I'm going to move on to those who might have specific questions. I did what the site said. Normally, if you get to the website, you should have no problems. So this is how you do it. You get to proindicators.com, you pick up the English language, of course, you get into TradingView. You scroll down to there, try a week for free. and you just put your trading view username in here. So just to set things straight, because some of you guys are misunderstanding that field, what I expect you guys to do in here is to give me this exactly, okay? And it's case sensitive, so give me capital letters as well. It really has to be the exact same thing you have in here. Don't give me your email address in that field. This is what I absolutely need to have in order to activate your access to the indicators. Okay, so that might be what you are referring to. If you subscribe, John, if you subscribe to the website via the website, then it's either I've been sending you an email telling you I don't have your username to activate you right away, otherwise normally it's done in a couple hours, okay? And as you posted that message 3 days ago, normally you should have been processed. So if you got in there, subscribe via PayPal. So let's say, for example, I want to subscribe myself. What I will have to do is do this, Pro Indicators, put a subscribe button. And this is how you go. This is tell you first for the 3 weeks, which means you're not going to be billed until 7 days run. And you can cancel at any time, okay? And this is how you do. It tells you pro indicators reminder, and this is how you should do things. And if you've done that, and if you've been checking out, normally I should have received a notification, and I should already have processed your thing. So if you're still not in, means that heavy problem. And in that case, you reach out to me, you send me an email, and we're going to figure it out and eventually restart your free trial. Because, of course, if you're already 3 days off, your 7 days trial means that you will obviously have to start another trial to get a fresh 7 days to start out of. Anyway, goodbye, guys, and we'll see you tomorrow. Once again, if you have questions in here, this is where you want to ask me to answer those instead of trading view or whatever. So technical questions have to be asked in here. And of course, I always appreciate when you guys cheer up or send congratulations or thank yous or things like that. Really is always appreciated. So see you tomorrow, guys. We'll do it on a daily basis, so we'll see you tomorrow as well. Tomorrow will be a shorter video, as on the first day of the weeks we speculate on the ongoing week scenarios to expect, and of course tomorrow we'll just review how things went accordingly or on the opposite side to what I forecasted. So see you tomorrow. Goodbye, guys, and have a great week.